Hello, friends, and welcome to today's session in Sciative Knowledge Series. I am Kawaljeet, and I'll be your host today. We at Sciative Solutions are committed to bring amazing speakers in this knowledge series on pricing best practices. Alongside our distinguished speaker today is James D. Wilton. James is a pricing practice leader at Sales Benchmark Index, a sales and marketing focused consulting firm. James works with business leaders across industry to grow their revenues and profits through pricing strategy transformation and optimization. He has developed abilities to rigorously combine and solve analytical problems with upcoming practicalities and laser focused results. James holds an MBA from Columbia's Business School and a master's degree in natural science from University of Cambridge. James, it's an honor for us to have you as a speaker today.
Thank you very much, Coel. It's an honor for me to be here as well. Thank you so much for inviting me. And I'm very grateful to everybody on the line for choosing to spend this hour with us today.
Okay. For the audience, you can follow and post your comments on Twitter using Sciative and Ask James. Today, the end, as time permits, we'll ask the question asked by audience as per the tweets. Today, James will be sharing his views as he told on the topic the essentials of pricing strategy transformation. The importance of improving the current price strategy is must. Thank you, James, for speaking on this amazing topic today. We look forward to hear your views today. Over to you, James.
Thank you, Coel. Thank you very much. Well, great. Well, welcome everybody. Thank you for joining me. And I will get straight into the topic today, which is pricing strategy transformation. Then the first question you may be asking yourself is, what do we mean by pricing strategy transformation? And my answer is, this is the way that I define it: changing the way that a product or service seeks to capture value that it creates for the customers. Now, you might say to me, James, that's quite a wordy way of saying it, right? Why don't you just say changing your pricing? Isn't that what it is? Well, the reason that I don't do that actually is that I think even in today's world where pricing has got a lot more visibility, a lot of people still tend to think of pricing as just being one thing, as being price level, right? Optimizing your price level. And that's certainly a part of it, but pricing strategy goes way beyond that, right? If we are transforming our pricing strategy, we can also be transforming our price execution, which is the way that we go out into the marketplace and get the price that we deserve for our products. We could be transforming the price structure, which is the way that you actually set price for a customer or a customer segment, what it depends on. And you can also be transforming the price positioning, which is actually the way that we read the market and we look at our competitive situation and what we're trying to achieve and decide how we go about trying to price to the market overall. In short, pricing strategy is a very broad discipline, and therefore pricing strategy transformation is also quite broad and involved. I'm not going to go through this framework with you in detail, but this is how we at SBI see strategic pricing. You can see list prices, which is what most people think of as being prices, is just one very small part of quite a broad holistic framework. So why did I want to talk to you about pricing strategy transformation today? Well, a few reasons really. I think firstly, pricing strategy transformation is becoming increasingly necessary in today's world. I was at a pricing conference a few weeks ago, and if I had $1 for the amount of times that I heard the word disruption, I would be a very rich man, right? But it's true. There is a lot of disruption going on in today's businesses. Markets are changing. Customers are wanting different things. They have different expectations. Companies are evolving. They have different capabilities. New technologies are coming out, which are giving us even more capabilities. And fundamentally, a pricing strategy which may have been very viable about as little as 5 to 10 years ago may not be relevant in today's world. So increasingly, companies are deciding that they need to transform their pricing strategies. But it's very challenging. As we've talked about, pricing strategy is very complex. There's a lot of different components to it. There's a lot of moving parts, and moving from one thing to another is just a complex exercise to do it. But I think when you're transforming a pricing strategy as opposed to developing one from scratch, you have some additional challenges because you're not working with a blank slate. You're working with an existing business which has expectations and has to operate as normal and has a customer base that it has to keep happy. So there's a lot of inertia to any change that will happen. It's always easier not to do anything than to do something. You're also having to manage a lot of risk. You know, if I'm a business and I'm operating as normal, I'm going to have expectations that I need to keep my results going. I need to keep my customers happy. Any change could potentially risk that. And so you need to be able to navigate past that and get over that fear of the risk that's involved to make the business make the change. But finally, it's also incredibly rewarding, in my opinion. I mean, developing a pricing strategy for a new product is definitely fun. But when you're looking at transformations, you're taking businesses which have history, which have been successful in the past, but may not be looking like their future is too rosy right now, and you're giving them the mechanisms that they need to be able to survive and prosper. And that's something that I've always found extremely rewarding. But why did I want to call my session The Essentials of Pricing Strategy Transformation? Well, I actually agonized over this for a little while because I was trying to think of what would be a really good topic for you guys, something that you would find valuable. And I didn't want to do anything too academic, but at the same time, I wanted to make sure that it wasn't too fluffy either. There's got to be enough meat in there to make it useful. And as I was chewing over a couple of different options, I was suddenly hit by an advertising campaign online from Banana Republic, which promised me that they would give me fall essentials, so essential clothes that I need for the autumn. Thank you so much, Banana Republic. You've solved my shopping crisis. But as I looked a little bit deeper at this picture, I realized that the lady in this photograph is wearing what appears to be a faux leopard skin coat. And I've no doubt that this is a very nice coat. It's definitely fashion forward, and I'm sure a lot of people would find this very desirable. But is it really an essential? I think an essential implies that you really need this. You have to have it. And I don't think it's fair to say that in order for me to make it through this fall, I absolutely have to have a faux leopard skin coat. And that made me think back to pricing strategy transformation, right? Pricing guy that I am. It brought me right back there because I think a lot of the times when we think about transforming a pricing strategy and we ask what we need to do it, then the answers that we get back is usually this enormous long list of all the things that we need. You know, we're told we need multiple variable conjoint analysis, and we need to know what our price elasticity is, and we need a VP of pricing to lead all of this. And we need to make sure that we've got price management software in place, and so on and so on and so on, loads of different things. It's basically this enormous bucket list of things that we're told that we need for pricing strategy transformation. Now, when I look at this list, I don't see one thing on this list that is not valuable. It's all good stuff. It is all helpful. But I think, do you really have to do all of it? When people ask me that, do you have to do all of it? I would say absolutely not. There are several things on that list which do exactly the same thing. And if you do all of them, you're just boiling the ocean, right? It's a waste of your time and resources. But if that's true, and you don't need to do everything, then it still begs the question, what are the things that I need to do? How do I decide that? So that really brought me onto this topic. The big question I wanted to ask were, what are the things that you truly need for a successful pricing strategy transformation so that people with limited resources can focus on those things and deprioritize the other things, or maybe just pick a selection which they feel would be particularly valuable? And it was a challenging list to come up with, but I believe I've distilled down what I consider to be the 4 essentials of pricing strategy transformation. And they are the right objectives, having great customer understanding, having access to really good problem solvers, and being able to collaborate with sales, marketing, and product. All right, that's it. We're done. Of course, I'm kidding. We're not done. What I want to do now is to run through each one of these in turn and talk about what I mean by this, why you need this, and also give some techniques that you can use to make sure that you do this right and you really leverage what you have at your disposal to really maximize the impact to your pricing strategy transformation. So without further ado, let's go through these, and let's start off with having the right objectives. So I'm going to start off with a myth buster. There is no one single correct pricing strategy for your business, no matter what anybody tells you. There may be several that are wrong, but there's not one that's the right one to have. And similarly, there's no magic bullet price strategy for a company in a particular industry. It's a myth. Do not believe anybody who tells you. There may be best practice techniques and things that you have to do, but there is no actual, this is the right pricing strategy for your situation. Now, what a pricing strategy should do is it should help you achieve your business objectives and your business strategies. So if I have a business objective to, say, reach $10 million in annual sales by 2015, and I've decided that I've got a strategy to do that by identifying a particular customer segment which has a really high willingness to pay, then my pricing strategy should help me achieve that. And if it helps me achieve that, and it doesn't stop me from achieving any other business objectives and strategies I may have, I would argue that it is a good, solid pricing strategy. Now, you may hear this and say, James, I agree with that. That's very logical, but that seems pretty straightforward, right? What's the catch here? And my answer is there really isn't a catch. It is logical. It does make complete sense. But the reality is a lot of businesses don't do this. I frequently see businesses who have pricing strategies which have not been developed because they help them achieve what they want to achieve. They've been developed because it's what they feel they need to do to perform in this industry. They've maybe come into the business and they've looked at what their neighbors were doing and they've decided to do the same thing. So these strategies, they might support their business objectives, but if they do, it's more by luck than by judgment. So certainly to make sure that you've got a pricing strategy that really works, if you're transforming your strategy, you should be trying to align it to what you want to achieve. But I'm also going to ask you, somewhat provocatively, even if we want to do that, do you even know what your business objectives are? And I ask that not because I'm saying that you don't, but having gone through these pricing strategy projects several times before, I always start off the projects by trying to get the businesses to lay down what their business objectives and their strategies are. And the business never thinks it's going to take a long time because everybody knows this. But what invariably happens is you get everybody to write these down, and everybody has a different opinion about what the business objectives and strategies are. There's very little alignment. And that's not through any negligence on anybody's part. It's not through a lack of focus. It can be through several quite explainable reasons. It might be because there was never any real communication about what the business objectives were. It was something that the executives decided, but didn't really make it downstream. If they did send it out, maybe we didn't receive it. If they did receive it, it could have easily been misinterpreted, right? If you just heard something once, it can change its meaning over time. And also fundamentally, people prioritize differently. If I'm from marketing, say, and I hear a list of business objectives, and one of them happens to particularly resonate with me from a marketing viewpoint, that's the one that I'm going to remember, and that's the one I'm going to focus on. So ultimately, people may have different understandings of what the business objectives are. But if you all think you have different business objectives, you can't devise a pricing strategy that will cater to them. So the first step in all of this is to make sure that you align on your business objectives. And the way I'd suggest you do this is just through workshopping it. Get a good cross-functional team together and just ask the group, what are we trying to achieve and how are we trying to achieve it? Try to work together to come up with a comprehensive but prioritized list on the board. And being comprehensive is important, right? You don't want to just have one business objective, which is hit certain revenue goal by certain time, because it's rare that you're ever trying to just achieve one thing at the expense of everything else. I actually have a good story to share with you on that, actually. Some of you may have heard of the company General Motors. In fact, I'd expect most of you to have heard of the company of General Motors. It was at one time the largest automobile manufacturer in the US, and in the mid 20th century, they had a 29% market share, which was huge. But by the early 2000s, the company had really declined. They did not have the same status anymore, particularly with the entry of Japanese and Korean manufacturers into the market. And they were trying to recapture their glory days at this point. They decided they wanted to get back to this 29% market share. So they launched an initiative to do that. Let's increase our market share to 29%. And they really threw everything behind this, even going as far as to making their managers wearing badges with the number 29 on it to remind them. But of course, I imagine several of you on the phone are people involved in pricing, and I'm sure you know that the first thing that people tend to do when they want to drive up volume is drop price. And they did. They dropped their price at the deal. They let several deals go through which were not profitable, all in the spirit of trying to capture this 29% market share. And by the end of 2005, when you looked at their share returns, it looks something like this. All those numbers are red. It was not a great situation. They had really destroyed a lot of value through doing this. So you can ask, what's wrong with this, right? I mean, they had a clear business objective and they aligned their strategy to follow it. So what's the problem? Well, the problem was it wasn't really their only business objective. It's true, they did want to capture 29% share, but they didn't want to do so at the expense of profitability. So had they thought about that, we want to get to this share point, but we also want to maybe keep this particular margin, maybe they would not have been in the situation that they ended up in. So it's important to think about having several different business objectives to achieve. But as soon as you do that, you're going to realize pretty quickly that sometimes the different strategies and objectives you have may have conflicting implications for your pricing. So for example, I think one thing that's quite common is a business might say, we want to increase market share, and we also would like to grow our average revenue per customer. I mean, both of those things make sense to us in our business growth. But if you think about what pricing tactics would align to those two things, if I want to increase market share, then I might say I want to lower my prices so that people are more likely to adopt the product. I might want to make the choices really simple to facilitate decision making, to make it easy to digest. And I might want to sell the product through an electronic channel just so I can reach as many companies, customers as I possibly can. But if I want to grow my average revenue per customer, then in that case, I might firstly raise my prices because I want to bump up that dollar per customer. I might decide that I want very granular choices for my customers because I want to be able to monetize every single decision that they make, everything that they want. And I may decide that I want to have a direct sales force because if I've got very granular choices, it's probably going to be quite a difficult selling process and I'm going to need some good reps to navigate that. These are not the only things you could do with those two things, by the way, but they're two ways that you might lean given these objectives. But it should be quite clear from this that these two strategies completely oppose each other. They are completely opposite. So you can't do both of these two to maximum effectiveness at the same time. You have to make trade-offs. And that's why it's very important when you have all your objectives to just think about what's on the front page. If you think about a newspaper, right? The amount of news, the news that's available in the world every day is exactly the same for everyone. But depending on what customer segment you're in, whether you're based in a certain country or region, whether you have certain political leanings, whatever the segmentation scheme may be, the newspaper is going to give you that news in a different order. There's going to be different articles in the middle, and there's going to be probably a different headline on that front page. And that's the way that you should think about your business objectives and strategies. You should think about, I want to absorb everything, but I also want to be able to prioritize by importance. So think about what's the most important thing versus the least important thing. And now that I've got all that information and I consider what pricing strategy options I have, I can consciously decide on what trade-offs I want to make rather than accidentally not achieving one business objective in favor of another one. I actually have a case study for you from my past on this as well. When I was working for a company that had recently acquired a business that made an online reference tool. It's basically a lookup tool for information in their specific specialized field. This was a very important acquisition for the CEO at the time. It wasn't a very big company to be acquiring, but it was important strategically, and there was a lot on the line for him in terms of his credibility in making this acquisition. So he was very keen that it go well. And that was why he brought me in to help him with his pricing strategy, making sure that they integrated it into the business and to help them hit their quite aggressive targets. So singing from my own hymn sheet, first thing I did in this project was to find out what the business's objectives and strategies were. And what came back was we want to hit our growth targets, which were quite aggressive. And we want to make sure we're charging more to bigger accounts because we want to monetize the extra value that they're creating. And we want to do that through our price metric, which is our number of licenses that we sell to them. And beyond all this, we also want to keep our customer base happy. We've got a very loyal customer base who've been with us for a long time, and we don't want to disappoint them during this process. So when my team went in and started analyzing this, we actually found some very interesting and useful findings. Firstly, we found out that the number of licenses that a company was buying was not dependent really on the size of the company. Now, they'd stated in their objectives they wanted to be charging more to bigger accounts. But what you've got here is that the large companies weren't buying appreciably more licenses than the small companies. And since there wasn't any other kind of price metric involved here, the price of a license was the same whether you were small or large. So through this mechanism, they were actually not charging more to large companies than small companies. We also looked at content with this. This tool looked up from an amount of content that you decided you want beforehand, that you would actually subscribe to. And the amount of content which companies wanted was actually the same regardless of the size of the company. It wasn't really dependent on it. However, when we compared that to how much they were actually purchasing, it was clear that large companies were purchasing everything that they wanted, whereas smaller companies were only purchasing a small subset of the amount of content that they wanted. So it turns out they actually were price differentiating, but they weren't doing so in the way that they expected to. They were price differentiating through the amount of content that a company was subscribing to. And that might not have been a problem if it wasn't for the fact that we also found through some customer satisfaction surveys that the amount of satisfaction that a customer had with the product was directly proportional to the amount of content to which they were subscribed. So this means that these small customers over here who were not subscribing to much, they were not very happy. They were dissatisfied with the product. So you can see here that in an effort to hit their growth targets, they'd actually not really executed on their charging more to bigger accounts, at least not in the way that they were expecting to, and they'd also not managed to keep all their customers happy at the same time. So the moral of this story here is that if you can align on what you're trying to achieve and how you're trying to achieve it, then you can test whether that's actually the case with your current pricing strategy, and it will give you a lot of great information that you need in order to move forward and build a pricing strategy that will answer those objectives later on. Or in other words, it's not too difficult to make your pricing strategy do something well. So you should just make sure that whatever it's doing, it's something that's valuable to you. Okay, the next essential of pricing strategy transformation is customer understanding, getting a really great understanding of your customer. Now, to start with the pushback, one pushback you may give to me is, James, this is true, but let's think about this. Whether you're transforming a pricing strategy or you're just building a pricing strategy for a new product, you're always going to need customer understanding. And secondly, if you're transforming a pricing strategy, then presumably you've already got a customer base, so surely you understand your customers already. I would say that is absolutely Not true. Just because you have a customer base does not mean you understand what they want or what they need. And in fact, I've seen several situations when that is not the case. I actually worked with a sales team once um, who were afraid to go and ask their customers what they wanted, because these customers had been buying their product for years and they didn't know why. They genuinely did not know what they were getting out of it, but they didn't want to go to talk to them because they didn't want to rock the boat, and they were afraid of losing credibility with them. I had trouble understanding that. I mean, not that they didn't understand their customers, but that they were afraid to go and ask them. So I think the key point here is, do not blindly assume that you understand your customers. You won't necessarily understand them. You need to make sure that you do and get data. And that's the key of this step. That will allow you to build a pricing strategy that really caters to those customers. There are 4 elements of customer understanding you need to get. You need to know what they want, their needs. You need to know what their buying preferences are, which is just how they want to buy from you. You need to know what their willingness to pay is, so how much they will pay for a product that does meet their needs, and also their perceptions of your performance. How well are you currently meeting their needs? We'll talk about all of these in turn, but I'm going to start off talking about the needs of the customer and their perceptions of your performance. I'd suggest to you that it's actually a very good way of getting to that information is through an analytical technique that you can deploy through a survey. And that's something that's very practical to do now, because there are so many free survey applications out there that are actually pretty good. So if you want to do this, you take 4 steps. And the first one is to just develop a list of fewer than 12 product attributes that could be important to buyers in their buying decision. So these could be things like ease of use, product quality, customer support, very dependent on what type of a product you're selling, but think of the things that really drive that decision making. And then ask your customers to rate the importance of each of these attributes in the buying decision, all the way from 10, which is very important, to 1, which is not at all important. Then ask them to rate the performance of your product on the attributes. How good am I at satisfying this attribute? And then do exactly the same thing, but with your competitor product. How well is my competitor doing on each one of these? And after doing that effectively, you can plot a chart like this, where on the x-axis here, I've got our perceived performance on an attribute, and it goes all the way from better than competition at the right-hand side to worse than competition on the left-hand side. The middle line will be about the same as competition. On the y-axis, I've got the perception of the importance of the attribute, where above the line is higher than average, below the line is lower than average. With some simple data manipulation, you can then end up plotting your attributes on this graph, and where they fall on this 2x2 gives you fantastic information about how your product is currently positioned. If you're in the top right-hand corner, then this is an attribute which is very important to a customer, and you are doing better than competitors on this. So these are your competitive advantages. These are the reasons that companies or customers will buy your product. On the top left, it's a very important attribute which you are not performing very well at relative to competition. So this is the opposite. These are competitive disadvantages, and these are reasons why a customer would choose a different product instead of yours. Bottom right, these are things that you're doing really well at, but they're not important to the customer. So these actually could be areas of overinvestment. Maybe you're messaging them too strongly in your marketing materials, or maybe you're literally developing this attribute too much within your product. And bottom left is not important, not performing well. So not really an immediate problem, but given that no points on this chart are static, they can move around. This is something that could become a competitive disadvantage if that attribute becomes more important. So one to watch. So the information you can get out of this is incredibly valuable, and I highly encourage you to do this, but I would warn you before doing this is be ready for several surprises, because nobody ever predicts perfectly what's going to come out of these. I've done so many of these different analyses for different customers, and no client so far has accurately predicted where those attributes are going to be for their customers. And sometimes those surprises can be somewhat scary and unwelcome. Once you've done this, I would suggest that you firstly cut the analysis by segments. Different customer segments are going to have different perceptions of where these points should lie. And that's going to really help you out, actually. It's going to help you design product versions, which will help you sell to your different customer segments and will help you price differentiate. It's very powerful. But also recognize here that no point is static. It's perceived performance and it's perceived importance. You can change your customer's mind where these attributes go. So if you've got an attribute which is very poor performing, you can change your customer perception by using your marketing messaging to state how good you are in this area, or you can go to your product people and you can actually try to improve the product in this area. Likewise, for attributes which you're doing really well at but are not very important, you could potentially use your messaging to increase the importance of this attribute in your customer's eyes. Moving that around actually allows you to control your competitive positioning and enables you to better execute on your pricing strategy. A case study on that, if you will, from my experience, I was working for a company which made a payment facilitation tool. It was basically it provided data to banks and institutions that enabled them to make payments to their clients and customers and employees. And the team here, the reason we were doing the project was because they felt that they had the gold standard product in this space. They were the best product, but they'd recently found it difficult to win new business because there was a new low-cost competitor had come in and was, undercutting them on price the whole time, and they felt that they were losing out because of that. It was something that they needed to deal with. So we went into this and started having a look, figuring out what we could do. We got an understanding from the internal team that the things that were really important to customers were the depth of the data and the breadth of the data. Those were the two main value drivers. And also the accuracy of the data was pretty important as well. And there were several other things which were less important but contributed to that decision. But when we reached out to the customers and asked them what they valued, we got a very different story. We found out that actually depth and breadth of data were only somewhat important to those customers. They would have been down in that area of overinvestment in that previous chart, whereas data accuracy, that was the real key thing that they were interested in. And that was an incredible finding for the team because all of their marketing messaging stated how great their depth and breadth of data was. That's what they were putting their focus on. So convincing the customers they were great at that, but they didn't really care about that. What they wanted to hear was how accurate the data was. So this gave them an opportunity to change that and change that story. But when we assessed this product and the competition against all these attributes and tried to figure out where they were, the internal view was that their product was up here, high value, high price, and this new competitor was low price, but also quite low value as well. But when the results came back, we found that actually customers didn't perceive much of a price difference between the two products at all, even if there was one. And in terms of value, there were actually some customers who thought that the competitor was a better product than our product. So this was a hugely revolutionary finding for the business. And as I'm sure you can imagine, finding out this kind of information is never fun for the business. It's a bit of a wake-up call. But if you don't have this information, you can't do anything about it. And getting it gives you an opportunity to change the game. So they were able to take this and address their product going forward and also change their messaging to try to put themselves in a better situation. Next, we need to think about buying preferences because that tells us how we should deliver the product to our customers. In an ideal pricing strategy, we will be doing something that delivers results for us, but also matches customer preferences. And that's why we really need to figure out what they would like to get. So we need to find out what they would like us to sell to them, right? Do they want to actually own a product? Do they want to buy it by subscription? Would they prefer to buy certain transactions? And so on and so forth. What level of choices do they want? Do they want an all-you-can-eat model when you just give them one thing, no choices? Do they want a simple good, better, best solution? Would they prefer to have a complex purchasing decision? Some more sophisticated buyers do. They actually want to choose at quite a granular level. And also, how would they like us to position price to them? What price metric do they consider to be fairest? How should we communicate to them what price is set on? Getting all of this information helps you give the product to the customer in a way that resonates with them, keeps them happy, makes them more likely to purchase your product. Willingness to pay. I'm not going to talk too much about willingness to pay because I know that there's a lot of information out there about willingness to pay right now. But the one point I will make is that there is absolutely no substitute for knowing what your customers are willing to pay. And emphasis on the word knowing there, right? Not backing into it, not assuming what your customers are willing to pay, actually having the knowledge. I would go as far as to say that having an analytical understanding of your customers' willingness to pay is a competitive advantage, something that will really differentiate you because it allows you to price differentiate at a much more sophisticated level. And it also gives you incredible price confidence going into those sales situations. And that means you're more likely to really capture the price that you set out to capture. There are a few different ways that you can achieve this analytical understanding. You can do interviews, you can do surveys, you can do historical data analysis sometimes. It really depends on how rich your data set is and how well it's being kept. Something I get asked about frequently is, do I need to purchase one of these sophisticated analytical tools? And my answer is that these things can be incredibly valuable, particularly if you're going to be doing dynamic price optimization, but it's not something that's essential for pricing strategy transformation. Most of the analysis that you'd need to do for this, you can do through Excel, provided that you've got somebody who actually can use that tool well enough. And that analytical tool would be a nice to have, but not an essential. So let's move on to the third thing, which is problem solvers, smart people. I'm going to dispel another myth here, and that's that it is not necessary for you to have access to somebody with years and years and years of pricing strategy experience in order to transform your pricing strategy. Is it useful? Absolutely. I mean, who wouldn't want access to somebody who's got real battle scars of pricing and who's seen it all, done it all? But you don't need it. It's not essential. You can still make do without it, provided that you've got access to some pricing knowledge. So that is not an essential of pricing strategy transformation. What is essential is the problem solving ability of the people in your team. That is something that you absolutely cannot do without. And to hopefully convince you of that, let's think about the things we need to do when we transform a pricing strategy. We need to think about what could be wrong with the current strategy. And for that, you need problem solving. You need to be able to structure the problem, brainstorm, all problem solving skills. Then you have to find out what is wrong with it. And that's analysis, that's drawing conclusions, that's also problem solving. Brainstorming options for pricing strategy components, that's problem solving. Assembling different components together to build a pricing strategy, that's basically building, fixing a very complex puzzle. That's also problem solving. And finally, evaluating and selecting the best pricing strategy. That's also problem solving. In sum, I mean, all of these are components of the two areas of problem solving, which is understanding the problem and developing the solution. So I hope that's clear. Problem solving, an absolutely fundamental skill for doing pricing strategy transformation. A big part of this is analytical curiosity. And that's what you really want to have in your team to make this work. And the only downside of this, I would say, is that it's, in my experience, not something that's very easy to coach. It's something which is really innate to an individual. You either have it or you don't have it. If you want to know what it looks like, have a conversation with a toddler around 2 or 3 and just speak to them and you'll get an idea, because they do this very well. It's just basically asking why until you get to the right answer, until you've really drilled down. Really great problem solvers do this instinctively. Another example here, let's talk about when I was working for a company that had a compliance solution, which was a solution that allowed businesses who were about to do business with somebody else to be able to screen that person against a bunch of lists of bad people, of people that they wouldn't want to do business with. It's a very, very useful tool, and actually It was a tool that they had to have as well, something in that space. That's a great business to be in. And going into this project, the perception internally of this product was that they had great results. They were growing very quickly. They decided to consciously lose small customers who weren't profitable for them to serve. And they were migrating to a new version of their product, which was going very, very well. It was very successful. So given that's the case, why were we even in there, you might ask? Well, the reason we were in there was because they were considering expanding internationally, and they wanted to make sure they did an audit and made sure everything was working well. Now, as I said, they knew that their revenues were growing, and that's how they thought about revenue, one year over another one. But I had access to very strong problem solvers who saw things a little differently. They were able to go into this and really dive in and figure out that they had a certain amount of growth through the migration. They had some growth through the new business, but then they had this big loss through attrition. And this was a completely new piece of information for this business. They were not expecting this at all. They knew they were losing small customers, but they couldn't imagine how they could possibly amount to that much revenue. So we dug into this and realized that as they expected, the attrition was much greater for small customers than it was for large customers. But again, this doesn't explain why that attrition would be as big as it was. But again, because I was working with very strong problem solvers, they were able to come in and say, well, maybe usage has something to do with this. We know that engagement in the product is important, so let's compare this with usage. And they segmented these results with usage and found out that for large customers who had high usage, there was practically zero attrition. They were not leaving at all. But for customers with very low usage, they were leaving at quite a high rate, certainly much higher than they were expecting. It turned out the underlying reason for this was because they were putting through very high annual price increases. And if you're not using the product and you're putting through and you've just received a high price increase, you've got a pretty good reason to get out and go buy something else. But all of these analyses and all of these insights were made possible by just having access to people who were good problem solvers and who could go through and figure these things out. And in fact, all the previous analyses that I've shown you from the other case studies were also done by people like this. It's very, very critical to pricing strategy. Very quickly here, problem solvers are really needed to manage complexity as well. If you think about transforming a pricing strategy, you usually have to be a bit more certain of the answer than you do when you're doing a new pricing strategy for a new product. Because if it's a new product, you haven't got an existing customer base and you can experiment a little bit. When you've already got an established business, it's a little more difficult just to try things. So you need to be closer to right on the first go. And that means considering a lot of different options. So when me and my team have been designing pricing strategies, we might be considering 5 price metrics and 3 price fences, 5 versioning schemes, 4 payment models. You put all those together, that creates 300 different options for price models. And I'm not suggesting that you should go through and look at each one of those and model them out and evaluate them, but you'll certainly need to do a fair few price models. You need to construct a few that will represent the set of 300 and that we can evaluate and decide on the right answer. And it takes people with very strong structure and problem-solving skills to do that. So overall, I would say there are several skills which are very valuable for your pricing team to have, but in terms of pricing strategy transformation, problem-solving ability is the only essential. We'll get on to the final one now, which is collaboration with sales, marketing, and product. So the reality is, although pricing people may design pricing strategies, come up with the ideas and do a lot of the number crunching, all pricing strategies get implemented through a combination of sales, marketing, and product. Okay, marketing's there because they need to produce the value messaging that will allow the pricing strategy to sing, and they'll build supporting materials which will communicate changes and will communicate the messaging to sales. Product people can make enhancements or fixes to pricing strategies when they change. You know, we said we might want to improve the product, they can do that. They can help you produce product versions. You know, if you want to split your product up into certain components so that you can price differentiate, they can help you do that. And they can also help you with your ongoing monetization by releasing innovations in a certain schedule. And salespeople, it should be very obvious. I mean, they're really where the pricing strategy ends. They go and do the field execution. So they're the ones who actually communicate the value of the product to the customers. They communicate how the price model works. And ultimately, they're the ones who are going to ensure whether or not you manage to keep your price integrity when you get to the customers. So fundamentally, if all of these groups don't buy into this, then your pricing strategy is not going to work. Without cooperation from all of them, your pricing strategy transformation is doomed to fail. And I've never seen a situation when we haven't had buy-in from all these three where a pricing strategy transformation has succeeded. It's essential. We often get upset with these functional leads when they don't support our pricing strategy changes. But when you think what they're up against, it's actually quite logical that they don't. They have the options to either resist the change or to agree with it. And as a result of that, they'll either get poor results or good results. Now, if they resist change and they get good results, that's a pretty good situation for them because they can say, well, good job we didn't change. I told you so. If they resist change and they get poor results, it's not a great situation for them to be in because people say we could have, we should have made that change, but they can always argue that it could have been even worse had we made the change. On the other hand, if they agree with the change and they get good results, then they're heroes. They did a really great thing and they saved the business. On the other hand, if they agree with the change and they get poor results, then that's a very difficult situation for them to be in. They could be under a lot of scrutiny. In certain situations, they could even get fired. So if you think that there's an equal chance of getting poor results or getting good results, then the obvious strategy to go for here is to resist the change, because that gives you on average, the best payout, the best situation. The only way people are going to go with agree with change is if they can believe that the chances of getting good results are much greater than the chances of getting poor results. And then they'll be heroes and they'll be willing to shoot for that. And the best way in my experience to do that is to include them in the decision making. So often pricing strategies are developed without bringing in these voices, and it's a mistake. It's a mistake for getting the buy-in, because if you get these guys to evaluate solutions with you and get a chance to express their concerns and discuss them and have them mitigated by the group, they're just going to be a lot more bought in to that ending solution. But they can also bring a lot of insights as well. Marketing can tell you about customer needs and positioning, give you access to market research. Product can tell you what the product is actually capable of and what we can actually do in terms of improvements. And sales can tell you about the buyer preferences, how well different messages resonate, and also Salesforce capabilities, what they can really do, because that could actually influence what kind of a pricing strategy you develop. And there are several ways that you can get buy-in here. You can either use the stick by saying, you have to change, and you can use the carrot by showing them that it will work. And good ways of doing those two things are customer research, as we've talked about before. The voice of the customer is a great way of convincing people that this is something that will actually work in real life. Financial analysis, either showing that the current situation is not sustainable or that the modeled future situation is going to be value adding. Doing role plays so that Salesforce can get comfortable using the new strategy and other people can get comfortable in their perception of Salesforce's ability to be able to do it. And if you can, running pilots is great because that actually gives you actual concrete results to show whether or not this is something which is going to work. Very quickly, I'll just talk about price management software because I get asked about price management software every time we get into execution. Do I need to invest in that? And my answer is, it can be very valuable, but it's not an essential. And it certainly does not compensate for a lack of functional buy-in to the strategy. If you have buy-in to the strategy and you don't have price management software, you're still going to be okay. If you have price management software, in addition to functional alignment, then that's going to be even better because you have people believing in a strategy and you have a tool which is going to help you execute upon it. But if you don't have the functional alignment and you have price management software, it's still not going to help Because if people don't believe in that strategy, then all that technology is going to do is help them do something that they don't want to do. So there's still going to be resistance and you're not going to get results. So it can be very valuable in the right situation, but it's not essential for transformation. I'm going to skip over this example because we're running late on time. And that is everything that I wanted to talk through with you all. So let's sum up. So for me, the 4 essentials of pricing strategy transformation are these. Have the right objectives and align your pricing strategy to it. Get great customer understanding to drive decision making. Get great problem solvers to help you to uncover what's really going on and determine the right solution. And collaborate with sales, marketing, and product to ensure that you're able to execute successfully. With that, thank you very much. I'm happy to take any questions that you have.
Okay, thank you, James. You spoke so much about the quantifying values of pricing strategy and the transformation. Yes, we have a questions, and the questions are: any advices regarding startups, how they should do the pricing strategy, or what should be the essential ways they should do that?
So what are the essential ways that they should build a pricing strategy for a new company?
Yeah, exactly.
Okay, cool. Well, I'd say, well, obviously this presentation was mostly geared towards transforming from one thing to another one. I think if you're starting off and building a pricing strategy from scratch, some of the principles still apply, right? It's still important to really understand your customer and what they want, what they would prefer to have, and base your strategy on that. So, go out and do research. You can usually do research very inexpensively. And as long as you know the right questions to ask, you can find out a lot of information about what they need. And that will help you design versions, because versions are very important. It helps you give your customers choice, which improves the buying decision. And also just how they think about value from their product. What should you be tying the price to? What should you be positioning? If you can really understand the customer and you know what you're trying to achieve, then your pricing strategy should flow very naturally from that.
Okay, that's a very interesting answer. I still need to analyze that. So the next question comes up is, when a company changes its pricing strategy, how much time should it give to the new pricing strategy to stabilize? Like, do you have any thoughts on JC Penny price transformations?
On Penny price transformations, is that their move to getting rid of promotions and going to everyday low pricing?
Yeah, exactly.
Okay. Well, let me do the first one first.
Okay.
Uh, it can take a while for a new pricing strategy to set in, right? Because I think it takes the sales force a bit of time to get used to selling with the new messaging and the new structure. So it can take a little while to ramp up. I would certainly estimate it would take at least 3 to 6 months for the company to be going to full swing. Now, I think the company needs to be given a little bit of wiggle room to be doing that, right? Relaxing the expectations so that they've got some room to get comfortable with it. And I think it's also very helpful if you can segregate it in some way. Like a lot of the times when I've been doing pricing strategy transformations, we'll sometimes change the pricing strategy for new business first, but keep the pricing strategy for the existing customers the same. And then at a point when we've got comfortable with the new pricing strategy, that's when we'll consider migrating the customers over. But doing so all at once is a lot. So it's good if you can stage it. For the JC Penny question, moving from promotions to everyday low pricing,
Hmm.
yeah, it was an interesting move, really. I actually have not seen the information on how successful it's been for them yet. But I'd say, I think, I don't know how well I would support that, really, just knowing the way that consumers behave in stores. Because, you think about how consumers behave. There are your price-sensitive customers, and they're conditioned to wait for sale periods to go and buy things at a lower price point, right? And they'll be happy to do that because they are price buyers. They want the low price, whatever happens. Customers who are a little less price sensitive won't be prepared to wait for the sale period, so they'll go in and they'll buy it at a higher at a higher price point. And it's a really, it's a quite basic but often used price differentiation strategy. I think it's become somewhat less effective recently in stores because you see that promotions are getting more and more regular, so you don't have to wait as long for it to happen. I think that's an execution problem, but
Okay.
I do question the decision to just move to one price because it basically removes all your price differentiation, which I can't imagine would be revenue generating for the business.
Mm-hmm. Okay. Okay. So I have one more question. Like, as we move into a more technologically advanced world, is the price should the pricing strategy be conservative regarding the customers, or it should be an aggressive pricing strategy?
Sorry, could you? So the question was, as we move to a more technologically advanced world, should the pricing strategy be more aggressive or more conservative?
Exactly.
Exactly. Does that mean in terms of price levels, Joel, a price higher or lower, or?
It's regarding the customer views. Like, should the customer be more situated towards the conservative price, or the company should be pricing in a conservative way so that the customers comes to it, or they should be pricing aggressively as per their competition so that the whoever is the best, the customer chooses from them.
Oh, I see. Right. So basically, should we be pricing high and matching our competitor prices, or should we be coming in low so we can get share, basically?
Exactly.
I got you. That's a great question. That's a great question. The way I would look at that is, you know, a lot of my answers start that it depends, and I'm not trying to cop out. I think a lot of new businesses in technology, uh, a lot of the value comes from having high share, right? From having a lot of different customers. So in that case, the business objective that they have coming into this is about trying to get volume. And if that's the case, if you've got quite an entrenched competitor who's quite high priced, then it's no doubt that the easiest way of getting in there is to price low and get in. The only caveat I would make with that is, I mean, you don't want to be pricing low and then have people perceive you as being low value.
Hmm.
And so, you'll then have trouble going in. What you really want is to have a mechanism so that you can come in pricing at a low level and then increase your prices as you start to deliver more value. So I think it's always good to be able to say, look, we're going to be giving you this promotional price for the first year. Then the next year, the price is going to return to this original level, rather than saying our price level is 50% of our competitors. And that's a far more defensible strategy, and it's less likely to trigger a price war.
Okay. So thank you, James, for answering the questions. And James, it has been a very enlightening session for all our audience. Price strategies don't last forever. That's very clear from what you say. They are keep constantly changing, and to make the to for the business leaders should be ready to change their pricing strategy to lead in this world. Thank you for your insightful case studies and example, James.
You're very welcome, Cole. Thank you very much for having me.
Okay, this knowledge series is being conducted by Sciative Solutions. Sciative helps companies to complete and grow profitably through price optimization strategy. Please keep checking sciative.com for future sessions in series. Our next session is on 28th November, 5 p.m. Philippines time and 2:30 p.m. India time. And our distinguished speaker will be Eric Robbins, and he'll be talking about executing pricing discount strategically in price sensitive marketing segments. Thank you for joining today. Looking forward to see you in future sessions, James.
Thank you very much.
Okay, the audience can share their feedback at info@sciative.com. Have a have a good day. Bye bye.